What's up, guys? Today we are doing a case study on Euro NZD of what a high quality A++ trade setup looks like. Okay, so we have to remember in trading that typically sitting on our hands and taking less trades equals more, right? Less is more in the markets, and that's because we need to be focusing on high quality setups, not just getting in because we want to be in a trade, getting in because, oh, maybe it's doing this or maybe it's doing this. This opportunity right here was literally golden. And this is why I want to break it down, because we need to have that image in our mind of what a high quality setup looks like, what we should be looking for, what we should be waiting for, and recognizing why these are the only kind of setups that we want to take. Okay? So as we could see, I want to go to the higher time frame real quick and show you how this market was in a massive bullish move. Okay? So we had this candle that engulfed all of this price range right here. And then we had another massive bullish candle coming out of that. We had a push up to the highs and we had some profit taking to about 50% of this candle. We held that, and essentially price is looking to continue to make another higher high, right? So on this higher time frame, we have a confirmation. We have a high probability of it making a higher high. So on this lower time frame, what we're going to be looking for is profit taking. We're going to be looking for liquidity, and we're going to be looking for where the next low is going to be so we can end up buying into it, right? So as you can see here, we have had a push high, a push high, a push high. And each one of these pulled off. In other words, people were trying to buy here and market makers were selling into it. People were trying to buy here, market makers were selling into it. Buy here, market makers were selling into it. But what we were left off with was essentially a low and a high. Okay? It's still showing us that volume is pushing higher. Now, this is a subtle indication that I like to use. It's not always going to be accurate, but I typically find that when the high of price makes a higher high at the end of it, it typically indicates that the market is going to dip back below to take liquidity in order to actually make another higher high. Okay? This is just something that's a subtlety to observe. Okay? Now we're going to break down all of these confluences and how they were pointing to this bullish move continuing. First off, when we trade on lower time frames, or if we're trading intraday, it's always important to recognize what the weekly, what even the monthly might be doing and what part of the price cycle we might be in. But what we had here is probably a lot of people in FOMO trying to buy into this because now they can clearly see that the market is going long, right? So then you get people buying, you get people placing stop losses below areas such as this, areas such as this, areas such as this. And as you can see, the market swept, took liquidity, swept, it busted right through this range and went to take liquidity at the low. So these are what these wicks are, right? You can see we're breaking through these lows right here. All of these major points on essentially the price map, we have people placing stop losses below these who are going long. People who are going long and placing stop losses below these orders are cheap sell orders for market makers to actually buy. So when we see these wicks, we see this low played out, and then we see this next low played out. And here's what makes this so significant. The wick did go a little bit lower, but I didn't at this time think this was that big a deal because we have this balanced price range playing out here. You see these candles where the wicks just don't line up? But it balanced itself out with this bearish candle and this bullish candle. So this gives us a zone where we're seeing liquidity. We're seeing liquidity that is probably going to hold out based on how price swept here, and this was the result of it. This is very aggressive selling into this area, which is, I think, market makers trying to push price lower to give traders this idea that, oh, it's going short. We need to sell right here. We need to be in FOMO, right? Like we don't want to miss out on that. But this is why we're doing exactly the opposite, okay? We have this low that's holding. And the third time price hit this low, this was a confirmation for an entry. As soon as we saw this balanced price range being held, which I'll show you after this move as it plays out, we also have this 50, okay? Now, this is something I like to use as a secondary confirmation, psychological price levels. See 87.50, or we see the 00s, right? These round numbers are often levels that price reacts to very strongly, particularly the 50s, I have found. But when you have that, that's an extra added level of confirmation. So right here, within this one particular trade setup, we have this show of a higher high on the last previous high. We have the higher time frame confirmation. We have the lows being held and being wicked through. We have this balanced price range that I'll show you how that's going to indicate that this is going to go further. And we have 87.50. So you can see we are stacking confluences on this trade. There are several reasons for this to actually be going in the direction that it's going. So down at this level, you could have placed an entry such as this, taken your stop loss and kept it just below these wicks. And then let's say we were just being frugal with it, right? Let's say we take it into this area where here we have the last previous balanced price range, right? Where's my square box? There we go. So we had this playing out. Like, let's say we weren't even super confident that it was going to make a higher high, and we just wanted to get some profit out of it, okay? So we take it right into that area, and this is a, 1 to almost 6 risk to reward. So if you think about that, like, we don't need to take the whole move, because this one, obviously, this is a bar replay, and I can tell you that it went way beyond this. But if we look at this high risk reward ratio, if you're risking a consistent amount of capital per trade that you're taking, in other words, if you're risking 1% per trade or 3% per trade or 5% per trade, whatever you do with it, this is going to make a huge difference for you in the long run, especially if you get into the habit of looking for high quality setups like this. So let's see how it plays out. Okay. We pushed back into this range, held the lows, respected it again. And this is interesting to look at right here, where I'll take this off. So this price action right here, this kind of looks like that M shape traders like to chase after. You know, there's times when that's valid, and obviously I'm mentioning it with these. They're kind of like a secondary indicator of how price might be behaving. But when we see it at these lows, this is almost signaling to traders that it's like, sell, we're going to break through this low. And because we have these stacks of confluences, this is one of those opportunities where doing the opposite of the pattern is actually going to play out in our favor, and it's going to be very profitable for us. So let this play out. Let it cruise right up to the top, and boom, take profit. Easy, okay? And like I said, this went on, but you don't need it to go on, okay? If you're a swing trader and you want to actually try to catch trades like that, where you get like 1 to 10 or 1 to 20 risk rewards, just crazy stuff like that, you can. Like, you absolutely can. You could have found this low and you could have held this, or you could have maybe only taken partial profits at this level and then held it for as long as it was going to go. Because as you can see, it is going to go further. We're going to see a dip back below this price range because at this point in time, you have a lot of people buying. And in fact, that's why I kind of like these intraday setups better, because this is basically straight to your take profit. You're not going to be sitting in here and you're not going to see price do this and then essentially be like, oh man, I missed the trade. Like, imagine how you might be feeling at that point in time. Unless you're a really skilled swing trader, like, imagine how you might have been feeling at this point in time where you had price go to a 1 to 6 risk reward and then it dipped back all the way down here. Would you still be able to hold that trade? Would you still be able to sit with that and say, okay, like, maybe it'll still go back up, be okay with what if it didn't go back up and you just lost out on this huge profit? So like I said, taking the price right to the next specific zone of interest, sometimes, you know, like, boom, boom, easy. If you're only risking 1 per every 6 that you get, it's going to be pretty hard to not be profitable. Does that make sense? And what I need you all to understand here is, I've said, this is what you get from taking high quality setups as opposed to trying to take everything. When you have several confluences stacked and everything pointing to this is probably going to do this and I'm just looking for it to fill this range, then it's going to be really easy for you to take several percent in profit on your account. And then, boom, you're out. You don't have to worry. As you can see, this did go way further. Way further. You know, I'm not going to show you. You can look at the price now and see what it is and see how far it's gone. And that was an indication on, like I said, our higher time frames, right? We got a whole other candle coming out of this, right? But we don't need the whole thing, as I've said. Okay, my friends? So with that, this is a golden setup. The more you take high quality setups only and focus on only taking high quality setups instead of just trading because you want to, because you feel like it, because you're afraid of something, because you're emotional, in other words, you're going to be much better off, okay? Focus on the confluences, focus on the logic, focus on waiting for those high quality setups, and know that in the long run, it is going to pay you out in dividends, right? You are going to be very well set up by being disciplined in that way. Okay, my friends, that is all for today. I hope that helps. Hope that makes sense. Let me know any questions, comments you might have about this. And until next time, happy trading. Take care.